Hello, everyone. Thanks so much for joining us for another weekly wrap-up. My name is Jeremy Kronemeyer, Operations Manager for Wickham Financial Group. I have Graham Wickham here, President and CEO of Wickham Financial and Insurance Services. Graham, what's going on in the markets?
Hey, thank you, Jeremy. Thanks for our listeners jumping on the call. If we're looking at just general market performance and volatility, we saw January ended with increased volatility. So we saw the S&P 500, the Nasdaq Composite were mostly flat, where that Russell 2000, that small cap area, fell about 2%. If we look at the Federal Reserve and policy developments, now we saw the FOMC, they held interest rates steady. Chairman Powell, highlighted improving economic conditions, fading inflation and employment data risk. But the markets dipped sharply on Thursday morning. But then by the end of the day, they kind of rebounded a pretty good bit. We saw Fed chairman nomination now to replace Chairman Powell. That came out from the president. His pick, Kevin Warsh, was nominated to succeed Chairman Powell. Gold on that note fell about 9%. Silver fell off about 28%, so just some really big drops. But keep in mind, they also rallied so much coming into that on expectations of less policy easing coming from the new chairman. And his nomination eased concerns about the U.S. dollar debasement. The dollar ended up rallying on Friday. We look at corporate earnings. So kind of driven by tech, we saw Meta come out. Shares jumped on some strong forecasts. Microsoft came out with really strong earnings, maybe a little bit slower cloud growth. Those shares pulled back a pretty good bit. And Apple, they beat expectations on huge handset sales or iPhone sales. But their stock just kind of rallied modestly, kind of pulled back a little bit. Not much came through with that. On economic data front, we saw a producer price index of PPI that rose more than expected, signaling some possible inflation acceleration and U.S. trade deficit. Now that widened sharply in November, potentially reducing Q4 GDP estimates. Consumer confidence, that declined to its lowest level we've seen since 2014. Now, on the international front, we saw Bank of Canada held interest rates pretty steady again. The Japanese yen weakened from the recent highs amid some speculation of FX intervention. And U.S. Treasury Secretary Bessent denied U.S. support for any of the yen. Now, if we look at Japanese core inflation, that slowed due to some temporary factors, but likely won't alter the expectation of rate hikes. European Q4 GDP, that grew about 0.3. That was above the 0.2 expectations. And Germany saw a slight rise in its inflation, a 12-year high in unemployment. Now, the week ahead, it's going to be really earnings driven this week. This is, I think, the heaviest week for earnings coming out. So we got some pretty big tech heavy hitters, not to mention many others. So we got Alphabet coming out, Amazon, Advanced Micro Devices, Palantir, NXP, Qualcomm, just to name a few, but many coming out, really setting the tone for the earnings season and giving us probably a real clear picture on the direction. I think we're already seeing some strong positive earnings growth. We'll see if that continues to pick up. But from a government fiscal development standpoint, we'll see a risk of some potential U.S. government shutdown, how that'll be resolved, and some negotiations, including some debates over limits on immigration enforcement. Then we'll get some U.S. economic data coming out, like non-farm payrolls on Friday. That's expected to show down 70,000 in job gains in January. We'll look at strong economic backdrop from last week's FOMC communication, suggesting some reduced labor market concerns. And then some other data releases. We'll look at the February preliminary consumer sentiment, the ISM manufacturing PMI, ISM service PMI, and then globally, it's going to be central bank driven. We have the Bank of England, the BOE, expected to hold rates pretty steady. We'll get the European Central Bank, the ECB coming out, and the Reserve Bank of Australia. They may consider some rate hikes after a Q4 inflation rose to about 3.6% year over year. Jeremy?
Thank you, Graham. So I had a question for you. It seems like, you're talking about big tech earnings. It seems like there's been a huge rotation from big tech into other areas. What do you think about that?
Yeah, I think you're seeing it correctly. Absolutely. And I think like what we were talking about in our end of the year wrap up and our thoughts, we're going to see the continuation of the underperforming, unloved areas start to really shine, like the small cap, international, more the value area, the energy area, that commodity area, like gold and silver continue to rally quite hard, even though they had a pretty dramatic pullback, maybe a pause just in this long-term trend here, or a trend that they've started. So yeah, I think it's going to continue until the market feels like it's oversold that area, which could happen a little quicker than what we think, because usually when the herd starts, they all move together. So don't be surprised if we see this pick up a little bit more before it pauses and we get a rotation back to some degree into those areas.
Gotcha. Well, Graham, we always appreciate the information and expertise, and thank you to our listeners checking in with us every single week. We look forward to seeing y'all next time.
Take care.